Welcome, my friends, to a deep dive into the secret sauce of investing: patience, perseverance, longevity, and the incredible power of compound interest. As we all know, every investor dreams of uncovering the next big thing, the one stock that'll catapult us into the world of extraordinary returns. Think the Apple of the 80s, the Amazon of the 90s, or the Tesla of the 2000s. But what if we told you that the real magic lies in holding on to those stellar finds? That's right, patience and compounding are the secret ingredients to wealth accumulation. Buckle up as we delve into the investment strategies of some of the greatest investors of our time, revealing how a mere handful of smart decisions shape their financial destinies. Let's kick things off with a trip to South Africa and discuss the heartwarming tale of a media company called Naspers. In 2001, they made an astute move to invest $32 million in a then relatively unknown Chinese internet company called Tencent. Today, that stake is worth more than $100 billion. An actual fairy tale investment. Naspers had the foresight to recognize the disruptive potential of Tencent and, more importantly, the conviction to hold on to it. The value of Naspers today is overwhelmingly driven by that single investment. In fact, at times, its stake in Tencent has accounted for over 100% of Naspers' market value, meaning the rest of Naspers' substantial businesses were valued at less than zero by the market. This shows how one brilliant bet, held for the long term, can dramatically shape an investor's fortune. Let's now jump back in time and pay a visit to an ambitious investor named Warren Buffett. In 1976, Buffett invested in an insurance company he knew well, Geico, which was then on the edge of bankruptcy. He helped hire a new CEO, Jack Byrne, to turn the ship around while the company's main competitive advantages remained. Today, Geico stands as one of the crown jewels in Berkshire Hathaway's kingdom, showcasing the genius of Buffett's long-term vision. Then, in the late 1980s, Buffett saw something special in a seemingly ordinary company, Coca-Cola. He recognized the immense power of Coca-Cola's brand, and even amidst controversies and fluctuations, he held on to those shares. This investment makes up a significant part of Berkshire Hathaway's colossal portfolio today. A simple beverage company evolved into an unexpected goldmine, all thanks to Buffett's sharp instincts, unyielding patience, and unshakable belief in compound interest. Fast forward to 2016, when Buffett took a bite out of the Big Apple, buying into Apple Inc. He saw the transformative potential in Apple's ecosystem of devices and services, anchored by the iconic iPhone. Despite the skepticism he initially faced, it's now one of the most profitable positions in his portfolio. What ties these diverse investments together? It's not just their extraordinary returns. It's also the patience and conviction with which Buffett held on to these companies, even as others doubted and market turbulence shook less steady hands. In his 2022 letter to Berkshire Hathaway shareholders, Buffett confessed that while many of his capital allocation decisions have been average, Berkshire's successful outcomes can be traced back to about a dozen truly excellent decisions. Let that sink in, dear investors. This is Warren Buffett, one of the greatest investors of all time, attributing the bulk of his success to just a handful of stock picks. Buffett's wisdom echoes loud and clear. The path to investment triumph isn't cluttered with countless average stocks. Instead, it's paved with a few truly great ones, held patiently over time, weathering the storms and basking in the sunny upturns of the market. Buffett's words ring a bell, don't they? Fewer but more calculated decisions. That's the key. Now, let's explore why so many of us stray from this path and how we can course correct for more rewarding investment journeys. So why, you may ask? Do so many of us succumb to the allure of short-term gains? Why do we jump ship at the first sign of turbulence or sell our winners to chase the next shiny object? The answer lies deep within our hardwired human psychology. We are creatures wired to seek instant gratification. That's why we can't resist checking our phones every few minutes. Or why we prefer the dopamine rush of a quick stock market win over the gradual growth offered by long-term compounding. But here's the twist. This very short-sightedness can be your greatest weapon on the stock market battlefield. How, you ask? By spotting and seizing opportunities that others overlook in their quest for quick gains. Here's how you can harness this insight to your advantage. Seek out businesses with solid moats, a unique competitive advantage that shields them from competitors. Look for those led by remarkable management teams and primed for growth, and buy them at reasonable prices whenever the opportunity presents itself. And once you find them, resist the familiar urge to sell. Instead, let them run and allow them to compound. Consider the example of Alphabet, Google's parent company. Those who identified its moat in the early 2000s, unrivaled search technology, and a treasure trove of data, and held onto their shares would be sitting on a gold mine today. The secret? Spotting the moat, buying at a reasonable price, and then holding on. Come rain or shine. But let's set the record straight, my friends. We're not encouraging naive loyalty to your investments. If the fundamentals change, the moat crumbles or management slips, then it's time to reconsider your position. But all too often, unfortunately, many investors bail out at the slightest bump, sacrificing the opportunity for exponential growth. As an investor, your portfolio need not brim with countless stocks. Instead, 4 or 5 true long-term compounders can set the stage for a prosperous future. So, as you embark on your quest for these rare gems, remember, investing is not about racing like the hare, leaping from one hot stock to the next. It's about plodding steadily like the tortoise, inching towards the finish line. In the immortal words of Charlie Munger, the big money is not in the buying and selling, but in the waiting. So, let's make patience our ally, compound interest our secret weapon, and long-term wealth our ultimate prize. As always, don't forget to like, subscribe, and share this video with your fellow investors. Until next time, stay curious, stay patient, and invest smartly. Cheers to a future filled with prosperity and success.